Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. So, I am not a financial advisor. Please take this as entertainment only. There is no financial advice to be, no good advice to be found here. So, I've been watching a lot of videos lately about people trying to predict what's going to happen in the next quarter, going into 2025, and like what is the outlook in life in general. And everybody seems to have a different opinion. And my takeaway from all this is that I am probably not hedged enough for any of the scenarios. So I guess we'll just go over all of them. So I really hope that we have the regular dip here in October as a continuation of what happened in September. We can all buy into the things, and then we get the Santa rally in December, so we can all sell things and take profit, and everything is good in the world. The other option would be the economy starts going into a recession. And recessions are easy as long as I still have my job. I can just use the distributions to buy into the high income ETFs, and they'll just continue to pay the distributions, and I'll own more shares, and it'll snowball. And no type of ETF is perfect, but the known issues, or at least the most talked about issues, are we get capped on the upside and we have no downside protection. And a lot of people, whenever it's just following the underlying down, they'll just say like, "Oh, it's NAV inversion, whatever." I don't think it's NAV inversion. It's just moving with the underlying. So, I would recession is pretty easy because like we can just buy into it and it's fine. The only thing is, if I had the money and I didn't have the goal of $3,000 a month as quickly as possible, I would be keeping my eye out for leveraged ETFs, because if they lose like 60, 80, 90% of their value, that is the time to buy into those. And although I am focused on my high income portfolio, owning a leveraged ETF like that for a year or two, like as the market is recovering, when that 3x leverage thing has recovered, you'll be much richer. You won't have 3x. It'll probably be 2 something x, but it'll still be more than 1 if you just invested in the underlying. So that is pretty okay. The other thing that I've been seeing is people are concerned about hyperinflation. Well, people are also concerned about the Middle East and the rising tensions there. And for me, I think it's a lot, well, it's not just a bunch of posturing, but I don't think it'll be World War III. Hopefully. And if it is World War III, we will all have other things to be worrying about than our investment portfolios. So I'm not going to make any changes based off of that. But hyperinflation is very scary because I don't really want my grocery bill to go from $200 a week to $1,000 a week. That's not sustainable. So, like, the ways to hedge against it include like real estate, and you all know how real estate is working out for me right now. I could buy physical gold, but to me, the steps that I have to take in order to sell it make it like I just don't want to own gold. The third thing is just making sure that you have enough cash. And also don't over leverage yourself with margin. If you only are utilizing 20 or 30% of your margin and everything goes down 90%, you still won't get margin called. So keep that in mind with the margin. Don't go all the way up. But basically, for hyperinflation, your dollars are going to be meaningless. But the price appreciation of the companies that you're invested in will be going up. So that's why being in a high income ETF might not be the best move, because we get capped on the upside. However, Roundhill, with their 0 days to expiration, I think will do pretty well with this, because they get the overnight exposure, so the price of the share will keep up with the underlying, or at least be in the same ballpark. And as increases, the volatility increases, and then the payout also proportionally increases. So I think that it does make sense in hyperinflation to own the underlying, and then also own a leveraged port as a portion of your portfolio, because you want to be able to sell the leverage and the underlying portions of it to take profit, and you can use that profit to buy more high income ETF shares, and then you can use the distributions to pay off whatever you need to get paid, and then you still have those shares for the next month and in perpetuity, really, until you decide to sell any of it. So I think that especially the Roundhill 0 day to expiration, XDTE, QDTE, and RDTE, I think those would be good in a high-end, a very exponential inflation situation, hyperinflation. To me, it would be beneficial for me to own the underlyings or the leverage versions of the high income ETFs that I do own, just so that I could participate more in the growth. But I only have so much to invest, and I really am focusing on the amount the distribution is per month versus trying to have a goal of my portfolio size will double in 6 months or however long, 3 years. No, my goals are I would really love to be able to make $3,000 a month in this brokerage account, because that's how much my mortgage costs, and so that's basically just making me whole financially. So I think, I'm trying the best I can to make my portfolio be resilient enough that whether we go into a recession or we have hyperinflation, that I won't get margin called, and I'll still have money in my account, and I will still have income. Anyways, what are your hedges for hyperinflation, and which do you think is more likely in 2025, a recession or a reverse market crash, which is what some people are calling the hyperinflation? And I will talk to you later. Bye.